Hey guys, it's 420 Tritty here, and today we're going to be talking about Harvest Health and Recreation. So they reported their fourth quarter and fiscal year 2018 financial results today, and let's get into their highlights. Their total revenue for the 3 and 12 months ended December 31st, 2018, increased 135% and 106% respectively from prior year. Total revenue for Q4 2018 increased 52% compared to Q3 2018. The company continues to operate profitability. Adjusted EBITDA for the 12 months ended December 31st, 2018 was $10.3 million. All dollars are in US dollars. So in 2018, they successfully raised almost $300 million of funds, primarily consisting of $50 million in convertible equity notes, $20 million in senior debt, and $218 million in a brokered private placement. So, Harvest Health, a vertically integrated and highly diversified cannabis company with strong financial and growth profiles, today reported the company's fourth quarter fiscal year 2018 financial results. Harvest has continued to be successful in winning licenses in non-competitive and competitive application processes throughout the country and has made a number of significant strategic acquisitions and mergers. Harvard's ability to combine size, scale, capital, regulatory expertise, and operational excellence are paramount to its success. Now, management commentary. So this is spoken by Steve White, their CEO. 2018 continues to set records for harvest growth and momentum across the United States, said Steve White, CEO. Three key initiatives dictated our decisions throughout the year and will continue to be our focus in 2019. Aggressively expanding our retail and wholesale footprint across the U.S., building, acquiring, and expanding our suite of brands across our footprint, and continuing to operate in a financially disciplined way while also fueling the revenue growth of the company. So, the financial highlights for the fourth quarter ended of December 31st, 2018. Total revenue of 16.9 million, an increase of 135% compared to 7.2 million in Q4 2017. Total revenue increased 52% compared to 11.2 million in Q3 2018. Gross profit, excluding impact of biological assets, was 7.2 million, an increase of 342% up from 1.6 million in Q4 2017. Their gross profit margin, excluding the impact of biological assets, was 42% and 23% respectively for Q4 2018 and Q4 2017. Adjusted EBITDA was 2.6 million compared to 2.2 million in Q4 2017. Their net loss was 71.1 million for the 3 months ended December 31st, 2018, and also includes a non-recurring non-cash fair value charge of $50.7 million associated with convertible debt that was converted to equity during the year. Now, honestly, you don't have to worry about net loss um, for the early stages because you're gonna expect them to lose money. They're aggressively expanding, so it makes a lot of sense where you'll see a lot of like net loss, and they're like they're just like turning up tables by being aggressive, so they establish their footprint for the future and also profitability, um, like growing revenue throughout the entire year. So honestly, it's not too bad. They're showing signs of growth, which we like to see in a growth sector. So also they acquired Verana Holdings, so they'll have like I think the largest number of retail licenses and so on. So they have that advantage. So this is honestly this will put them like number one or number two for largest MSOs. Not in like in terms of market cap, but in terms of like the footprint. I know Cresco Labs and OH has that large footprint now if the deal does go through. So yeah, total revenue for the 12 months ended December 31st, 2018 was 47 million, an increase of 106% compared to 22.8 million for the same period in 2017. So gross profit was 24.6 mil, an increase of 135% compared to 10.5 million for the 12 months ended December 31st, 2017. Gross profit margin, excluding the impact of biological assets, was 52% for the 12 months ended December 31st, 2018, compared to 46% in the same period the prior year. And adjusted EBITDA was total 10.3 mil, and compared to 6 mil for the same period last year. Net loss was 67.5 mil for this year, and 50.7 mil associated with convertible debt that was converted to equity during the year. Now, their year-end highlights. So this is where they talk about their activities for their financials, their growth strategy, and capital markets. So on November 13, 2018, Harvest raised 218.1 million in a brokered private placement. In 2018, they raised approximately $300 million. Um, 50 million was convertible debt, which was converted into equity when Harvest completed a reverse takeover, 20 million of senior debt, and 218 of equity issuance. They use this cash to expand in retail, cultivation, and production locations for medical and adult use cannabis. They applied for new licenses and received them in extremely competitive markets, and this further established management's credibility through a consistent track record of complying with the industry's stringent regulations, made selective acquisitions of facilities and brands, and they RTO'd on November 14th under HRV under CSE, and the OTC ticker is HRVSF, and yeah. Now we can take a look at their balance sheet right now. So, um, ending of 2018 was $191.9 million of cash and cash equivalents. Um, the same the same year, 30.9 million of debt, which is pretty good. You have a good cash to debt ratio, so easily pay that off. But obviously, they're gonna use that cash for expanding and other stuff. So they raised 300, which we already talked about, and they RTO'd for a price of um $6.55 per share, and right now they're trading around like 13 mil. No, not 13. Uh, yeah, they're trading around like $13 right now, and yeah, this is their um unaudited revenue sheet, their balance sheet. And yeah, I can link this in the description below. So this is it for the video. So make sure you like, comment, and subscribe for more videos. And I'll see you in the next video. Peace.